Okay, welcome everyone to Business Basics Friday. I am Safi Russell, CEO and founder of SDR Consulting, Inc. The purpose of Business Basics Friday is just to provide value to small business owners with various topics and guest speakers that we have. A little background about myself. I've been in the industry about 19 years and I'm a CPA and enrolled agent based in New York, but I do have a virtual practice, so I work with clients all over. And we mostly work with small business owners, helping them from business formation all the way through to tax preparation and all that fun stuff in between. So today we have a guest speaker, Lysandra Everett, and she's going to be covering the 5 financial appointments you should have with yourself. And so go ahead, Lysandra, you can take it away.
Hello, everyone. Okay, I'm over here multitasking, trying to share stuff and everything. So give me one quick second. Listen, we got to get this word out. Okay, now I'm done. Because if it's one thing I have figured out in life, I cannot share and talk at the same time. So welcome. First of all, I want to thank Safi for having me. I'm always honored to come on her show. She has done so well. And so I love being here. All right. A little bit about me. I am the Home Biz Tax Lady. I'm the principal owner of Everett Tax Solutions, which is a virtual tax firm. We specialize in small business. We do tax representation. And also for my crypto folks, you can come here and get your stuff taken care of. But I do have an affinity for my home business peeps because that's where I come from. I come from the home business industry, and that's really why I even started my practice, to help people in the home business industry. And we have grown from there. I've been in business for almost 5 years. January will be our 5-year anniversary. And we are just excited. Everything is going great and just cannot complain at all. So today, I really want to talk about the 5 financial appointments you need to set in your business with yourself as the business owner. Here it is, November of 2021. Can you believe it? And really, this is a time that we need to start really reviewing our performance for 2021 and also making projections for next year. So this is a great time to have this talk. I love how Safi works these things out. All right. So we're going to go through each one. All right. The first appointment you need to set with yourself is to review your budget. This is something that you need to actually be doing now, looking forward to 2022. And so your budget is really looking at, what do you plan to earn? And what are you planning to spend? So a budget is an estimate of your revenue and expenses over time. One of the quotes I like from Dave Ramsey, it says that a budget is you telling your money where to go instead of wondering where it went. And your budget is something that you create annually. So, right now is the time to be creating your budget for 2022, and you want to review that monthly. Next is your revenue. How much money am I making? That's what we want to know, right? So your revenue is your business's gross income. This is, what are you making in sales? Where is the revenue coming from? It's important to know where your revenue is coming from, because if you have a lot of different products and services, you need to know what's making you money and what isn't. And then how often is the money coming? You want to review your revenue at least weekly, right? To make sure that you are on course with where you want to be so you can make adjustments. Next is expenses. What am I spending? That's what you need to be asking yourself. So your expenses are the costs required to run your business. And you want to really look at how much money are you really spending and where is it going? Now, one of the things that we do as business owners and even just as people is we get used to paying bills. We get used to seeing money leave our account without really taking the time to ask, really, where is this money going and what am I getting back from it? You also need to know how often you have to pay that bill. Because one of the things that you got to do is make sure that you have the money available to pay the bill when it needs to be paid, right? That is a part of running a good business. And so you want to review your expenses monthly. The next one is budget versus actual. And what you're really looking at is, are things going according to your plan? Okay, so your budget is an estimate. The actual is a reflection of what you actually did. And so this is something that you want to go through line by line with everything that you budgeted for: your revenue, what you budgeted for continuing education, travel, advertising, all of that. And asking yourselves the question: were you above where you expected to be? Were you below? Were you right on point? And the most important thing is why. Why were you in those, different areas? And your budget versus actual is something that you want to review monthly, you want to review quarterly, and you want to review annually. Okay. So monthly is just that monthly snapshot, and you can see if something really happened there. Quarterly is looking at your overall quarterly performance to say, okay, how did this quarter go? You may have had an off month, but did you have an off quarter? And then, of course, annually. And when you're doing that, you can really start to get some historical data about your business to see if there are any trends. Are there times when you're spending more? Are there times when you're earning more? So that you can balance out your cash flow so that you're not cash poor in some of the weakest moments in your business. Every business has a moment of peak. Every business has valley. And what you have to do as the business owner is make sure that your cash flow is pretty even throughout those times, so that you're not, you're flourishing one moment and then you're scrambling the next. You really need to be pretty much on keel. All right. The next appointment is your financial performance. How are you doing? Like, really? So the thing about the financial performance is to realize that it's not personal. And that's what we do as business owners. We tend to take financial performance as an indicator of who we are as people, and it's not. It does not determine your value as a person. Your financial performance determines your impact in the marketplace, right? How much you made in sales, how much you spent in expenses. Okay. But again, I want to reiterate that it's not personal. It's just a reflection of your impact. And so perhaps if your sales are down, then you haven't had the impact that you wanted to have. If your sales are up, then obviously your impact is going on, right? And then for your expenses, like, are you spending too much money? And like, what are you spending that money on? That goes back to reviewing expenses. Because by doing that, then you can really get your own report card of what you need to fix and what you don't need to touch at all, okay? And you'd want to do that quarterly and annually. And then the next one is with your tax professional. Yay! So listen, when it comes down to visiting with your tax professional, the main thing is that nothing should be a surprise by the time you get to your tax professional. Okay. You should meet at, quarterly is ideal, but at least twice per year. Okay. So at tax time and, before the year end. Okay. So before the year end, like right now is the time that you can implement some last minute planning things. Okay. Because understand that once that clock strikes midnight on January 1st, we start all over, Cinderella, the dress goes back, the carriage turns into a pumpkin, all of those things, right? So everything that's going to be done in the tax year has to be done before December 31st, 11:59 and 59 seconds. Okay. So now is the time where you should be visiting with your tax professional, looking at what your profit is. Are there some tax planning things that you can do to reduce your tax liability? Okay. So this is why I say you can't just meet with your tax professional just one time a year and think that that's going to do it. It's not. The thing about tax, okay, is tax planning is preventative. This is like going to get your physical every year, right? To make sure everything is working properly. And then when we're preparing the tax return, that's an autopsy. everything has happened that's going to happen. There is nothing else that can be done. You're pretty much doing an autopsy on what happened in the previous year. So this is why the tax planning aspect is so important, because what you do during the year is what reduces your taxes, not at tax time. At tax time, it's over. It's just, a recap of what happened during the year, and boom, this is what you owe. Okay. So those are the main appointments that you want to set with yourself. And if you start to do this consistently, it makes your finances not so overwhelming, and you can break this up into bite-sized pieces. So, what most business owners do is, they come scrambling April 14th and trying to go through the past year, looking for expenses and revenue and all of that stuff. Save yourself that headache and designate specific times during the month in your calendar, and then honor your calendar, honor that appointment just like you would with a client. And if you do that, by the time you get to tax time, it's easy peasy lemon squeezy. You don't have any surprises going on, and then you're ready to go into the next year, which you're already a quarter through the next year by the time, tax filing is done, right? So if you do those things, if you take those, that little bit of time and start to put that in your calendar monthly, quarterly, all of those things, then tax season will not be so stressful when it comes down time to file. Okay, so Safi, that's it for me, girlfriend.
Thank you, Lysandra. That was so helpful, and definitely going to piggyback and converse a little bit more about some of those, because we are in the ideal time right now, and it's not the time. It is holiday season, but it's not the time to take a break from wrapping up your business for the year. So, I'm going to take questions first. It looks like we have someone here from Clubhouse with a question. So let me get this. No, okay, maybe not. Okay, either I clicked the wrong button or they didn't have questions. So we'll go back to that. So I'm opening up for Q&A. If there's anyone on Facebook or Clubhouse that has questions, feel free to raise a hand or add a comment. The whole after the fact thing, it's funny because we just got out of tax season, right? Like 2 weeks ago with the 1015 filers, and they don't realize, okay, this tax season, for last tax season is finally done, but guess what? This tax season is 2 months away. Yeah. What has happened this year, so we can get ahead of it before this happens again next year. And so it's not the time to take the break and say, oh, my taxes are finally done, I can wait till April. No, this is the time, like you said, to find those deductions, to implement the tax planning, to pay your quarterly payments with the last quarter coming up and due in January, so that come April, you're not scrambling and you're not stuck with this large bill, and you're not being subject to extra penalties and interest because you can't make the payment. Right. So it's just about being proactive. And I know that's not the norm. And I know procrastination is natural. It's a struggle for me too.
Procrastination is expensive though. Yes. One of the things I had one of my clients do, I went back and looked over like the previous 3 years, and there was an underpayment penalty every year. And it was, like average about $150. And I said, okay. I said, so what could you do with $450 right now? They're like, oh man, I could do this, and this. I was like, okay, you see this right here? This is $450 that you threw out the window. When you pay an underpayment penalty, that is extra money that you're giving to the government. And if you don't know if you're paying an underpayment penalty, look on your tax return. I think it's line 38. But it's right next to the what you owe line. It's just this little number down to the left side. If there's a number in there, that is free money that you gave to the government because of an underpayment penalty, whether you did not make any estimated tax payments, or if you did not make enough payments, have enough withholdings throughout the year. So that's free money that you're giving away to the government.
Absolutely. And those penalties add up, and they definitely can grow. And so one of the things you mentioned was the meetings that you have with yourself and then with your tax professional. And in order to know those numbers, like the budgeting and even the forecasting and the profit and expenses, it starts with bookkeeping, right?
It starts with bookkeeping.
Yes. And honestly, at the cost of the different platforms out there, we personally use QuickBooks Online in my firm. But I mean, the lowest subscription is probably $20, maybe now $15 even. It's so much more worth it than the receipts in the paper in the shoebox than the spreadsheet that, got formula errors all over. So just go ahead and break down and get the bookkeeping system. But I recommend having a tax professional or a bookkeeper help you set it up. Because
oh yeah, absolutely. And and that's one thing I tell people, like, I personally do not do bookkeeping. I have someone who does that. Okay. But so as a tax person, I'm telling you that bookkeeping is foundational. So it's not just the bookkeepers trying to sell you. It really is foundational. And having that structured bookkeeping, we hear everybody talk about they want to be a boss and they want to be this multi-million-dollar CEO and everything. But the fact is that you cannot do those things without proper bookkeeping. You just cannot, because you have no idea the financial health or status of your business. And that is the basic thing to know. It's like your vital signs. It's the vital signs for your business.
Right. Absolutely. Absolutely. And when you try to do it yourself, it's more expensive, just like
yes.
It's more expensive. I come across QuickBooks Online is a great system, honestly, hands down. But if you don't know what you're doing, it could be a mess. And to clean up that mess is more costly than to properly have yourself set up. And, you can maintain it on your own, if you're properly trained, if you don't have the budget to do full service, but at least get assistance with the setup. Because when you start adding accounts and they're in the wrong places, there's nothing we can do with those numbers.
Yeah.
One of the things that I do before doing someone's taxes is look at their books. And if they're not in a shape for tax preparation, we're not doing that return. Because we can't just make numbers up, number one. We can't take numbers that are negative that should be positive. So now's the time. If you don't have bookkeeping set up, if you haven't tracked anything all year round, just buckle down and do it now, because that's how you'll find out how you did. And that's how you'll be better prepared for tax season and having less stress for tax season on both sides, us and you.
Yeah. And and the thing about it is that we are in this DIY generation where people are asking, well, why should I pay you when I can just do it myself? But it doesn't match with what you say your goals are. Because see, if you're saying that you want to run this multi-million-dollar company, even if you don't want to run a multi-million-dollar company, you just might want to keep that thing small and tight. But do you really think Warren Buffett is doing his own bookkeeping? No. There is not one CEO that I know of, like, I don't know a whole bunch of CEOs, but all the ones that I know, they're not doing their own bookkeeping. They pay people. And what you have to do as a business owner is like, hey, how much is it going to cost for this bookkeeping? And then figure out what you need to do in sales in order to cover that cost.
Absolutely.
So you're not spending your time trying to learn bookkeeping and debits and credits and watching all the videos on QuickBooks. Like, I understand that QuickBooks got some great videos, okay? But watching all the videos on QuickBooks does not make you a bookkeeper.
Nope. No. If it took us, in many cases, if you went to school for accounting or if you studied for the enrolled agent or, everyone does different things, but it took time. It took years, of education and training and experience. And so to just try to jump into that just doesn't make sense. Like, if I have someone who has a medical practice, obviously I can't walk in there day one, just look at some YouTube videos and start practicing. So it's important to just kind of hand over what you can. And from the beginning, when you're at the startup phase, when you're doing your budget and forecasting and what am I going to sell? How much profit is there? In your expenses, you should be building in that professional help, because
and like, the bookkeeper is the first thing. Like, I will tell you to find a bookkeeper before you find a tax person, because at the end of the day, it's that bookkeeping that's going to help you be able to work with that tax person and they know what you're doing. And you also have to understand too, that as tax professionals, we have professional responsibilities. So if stuff doesn't look right to us, we have a professional responsibility to tell you no, because we can be held liable, and that's not happening. Right. So if a tax professional tells you, hey, I can't do this, it's not that they're trying to be mean to you or anything. It's just we have professional responsibilities. And I don't care what kind of check you write, it's not worth putting our business on the line when you need to do something to fix your numbers.
Right. Absolutely. Absolutely. And maybe we can touch on briefly, because it's something that I still, could learn more about, is, the difference between budgeting and forecasting. I don't know if you do that at all.
So I don't do forecasting, but I do help with the budgeting piece. So, so budgeting is really being able to manage what you have. Okay. Forecasting is great because you're setting a plan. It's like you're setting a target. Okay. It is, you can miss a target, right? You can hit a target, you can miss a target. But if it's not, if you have an invisible target, you're just aiming at nothing. Right. So, make a plan, set a goal. That's your forecasting. Budgeting is being able to manage what you have, and project that. So if you know that you're going to have to increase your advertising, for instance, okay, are you going to have to decrease somewhere else? Or are you going to have to increase revenue in order to cover that? And then you have to really be asking yourself, how am I going to get to this number? Right? Like, how many people do I need to talk to? It's really getting down to the nitty gritty of you need to talk to at least 10 people a day, because out of those 10 people, 3 people are going to say yes, they're going to listen to you, but only 2 of those may actually convert into sales. So it's actually getting down into the details of your business to figure out how you're going to make the money that you need to make to run your business, but also to get to that next target. I don't want to say next level, because I'm really tired of hearing next level. It's like, no, you got to have some kind of target. The next level can be anything. Right? You made 120,000 this year, you made 121,000 next year, you've gone to the next level. But was that where you were really trying to go? No. So, and it's okay. So listen, one thing I got to tell people, and especially listen, this is not my women business owners, okay? Because it's usually us that has this problem. It is totally okay to have big goals and big dreams and want big money, okay? Totally okay. You know why? Because red bottoms cost. They do. I don't even have any, but I know they cost. But it is okay for you to have goals and dreams and desires that are really big. As a society, we're kind of, we're taught to kind of be more reserved and more humble, if you will, for the lack of a better term. No. Go for your dream. If your dream is to have a 10 pair of red bottoms, that's your dream. You just got to figure out how to get there. Numbers help you get there. So don't be afraid of the numbers. If the numbers say, baby, you got to make $500,000 a year to get to where you want, you might not be at $500,000 today, but you might be there in 5 years. And it's all about setting the plan and working the plan, but you got to have a plan in the first place.
Absolutely. Well said. Well said. And one of the things I was on a training yesterday, actually, and it kind of simplified a concept for me, just to simplest form, was cash flow. And, oftentimes we get to the end of the year, we get to tax season. How do I make all that money? How do I make all that profit? And there's nothing in the bank. And it's all about cash flow. Yeah. And cash flow is simply income minus expenses, what's left over, and that's a rolling number. And what happens is, depending on how you're paid for your service or your product, can affect or disrupt your cash flow. So for example, let's say you have clients that pay over 90 days after you send them an invoice, net 90, but you have monthly expenses to cover your employees or cover your operating costs to make that product or service. Guess what? You're paying that money out from where? What cash do you have available when you haven't received the funds from the client? That's a situation where you can come into, this client has a $500,000 invoice. My expenses are $480, but the client hasn't paid yet, And so maybe capital, loans, that's where things like that come into play. But if you don't know that ahead of time, that's where people can kind of get in this rollable snowball, effect of, I don't have enough money, because you haven't properly aligned your cash flow with your expenses.
Absolutely.
Yeah. So that's why, in my practice, we get paid up front. But some people, depending on the industry, they get after the fact, and that can definitely affect your cash flow.
Absolutely. And listen, have a business savings account. Have a business savings account. Squirrel away some cash for savings, because you know what? The people that suffered the most, especially during COVID, are people that did not have any cash put aside.
Definitely.
Okay. So you don't have to go spend all your profit. You can actually just set up a business savings account. And by doing that, it also keeps you from automatically going into debt when you need to invest in your business. Like, there are so many things that you can do to grow your business that don't require you to go into debt. Listen, we all need funding, okay? Let us be clear. But it doesn't mean that you always have to go into debt for things.
Good point. Good point. And that's all about, like you mentioned, if you're seasonal or you have these, ebbs and flows of your business, those are the times, especially, after you get a year in and you can evaluate that, okay, I need to put away more this time of year so that when it's slower, I have this available.
Yeah.
And, that's it's easier said, of course, than done when you're in the middle and trying to just make things work. But when you take that step back and have those monthly appointments with yourself, it can definitely help you see things like that. And so you're not caught off guard, because God forbid, a couple of years from now, something else will happen and, you want to be better prepared for sure.
Absolutely. Yeah.
Yes. Okay, great. So we're going to go ahead and wrap up, Lysandra. Great discussion. I'm not seeing any questions right now. So we're going to go ahead and close out with our outros, and, definitely connect next week. Every Friday, we're here at 12 o'clock Eastern with a Business Basics Friday session. And this will be available full video on YouTube, as well as my podcast, which launched a few weeks ago. So in closing, Safi Russell, again, SDR Consulting, Inc., and CPA and enrolled agent based in New York, but I have a virtual practice. So we work with clients all over, and we mostly work with small business owners, helping them from business formation all the way through to tax preparation and all the fun stuff in between. And Lysandra, go ahead and let them know about how to get in touch with you and your details.
Absolutely. I am the Home Biz Tax Lady on all social media, but I hang out on YouTube and Facebook the most. And yeah, we are in Virginia, but we are a virtual practice as well. And we do have clients nationwide, and we work with small business owners. We work help you solve your tax problems, and also with my crypto squad. So yeah, that's what we do. But it was an honor being here. And listen, can I just say, ma'am, you be talking about the CPA and EA. Let's also talk about this master's degree, ma'am. Okay, let us talk about it. Thank you. I'm just saying.
You're right. You're right. You're right. And just hanging there in the end, like I don't see it. Yes.
Right. No, ma'am. Let's get all the letters out there.
Thank you. Appreciate that. And, we're all still learning. It's great to just be able to collaborate. And I appreciate you taking the time to come on today.
Absolutely. Glad to be here.
All right. Everyone have a great day. Be safe. Good weekend. And we'll see you next Friday. Bye-bye.